Vacancy rates have plummeted. Building costs have skyrocketed. There's been an uptick in demand, so there's no buildings available, and that's led to this, between 30 and 40% increase in rental rates.
We run kind of formal RFPs to show our clients, look, this is what the market's paying, this is the best rates you're going to get, and it's unfortunately a landlord's market for our tenants.
Hi guys, we're here with Kyle and Dean, otherwise known as Veet. You will be referred to as Veet during this podcast because it feels weird me calling you Dean. And we're here to talk about the rapid rise in rental rates in the industrial and logistics sector over the last 18 months. I take us back to when we started 2008, 2009. Rentals in Jet Park were 40 to 45 Rand a square meter. Pomona at 50, maybe 55 Rand a square. Isando at 35 Rand a square. And those stayed relatively flat for over a 10-year period. And then all of a sudden, after COVID, things started to creep up. So we've kind of looked at this now, and we've kind of broken it down into a couple of factors that have led to this rapid increase in rentals over the last 18 months. One of them being vacancy rates. So vacancy rates across the board, not only Johannesburg, Gauteng, with the Western Cape and KZN, have plummeted.
Yeah, absolutely.
Listed property funds, private funds, small private individuals. What do you attribute that drop in vacancy rates to?
Well, yeah, thanks, Kyle. Obviously, there has been a fantastic drop in vacancy rates. You're kind of looking at Q1 2022, we had about 5 to 6% vacancies in industrial portfolios. That's come down to sub 2%, so probably 1.7 to 1.8% vacancies in that portfolio. I would say that's due to a lot more demand for obviously quality warehousing. The e-commerce space has really boomed over the last, let's call it since COVID. Online delivery, we've also moved from a manufacturing type economy to more of a logistics-based economy. So we're doing more warehousing, less building.
100%. And I think also during COVID, there was no building. So guys didn't build during COVID. I think developers didn't feel that there was enough demand there. All of a sudden, we get out of COVID, there's a slight uptick in demand, and boof, vacancies have dropped dramatically. Absolutely. And then come pure supply, demand, economics, and rentals shoot up.
Yeah, there's another piece to that, I think, as well. I mean, obviously the supply and demand is primary to that. But what we've also seen is a couple of things. Increase in interest rates. We've seen an increase in building costs, cement, steel, increase in labor, increase in servicing sites and servicing developments. What that's done is obviously pushed your new build costs through the roof, driving a lot more of that warehousing industrial sector to existing facilities to try and obviously mitigate costs on their rentals.
So it's kind of like a rising tide lifts all ships. So it's closing the gap between existing rentals and new builds.
Absolutely.
It's interesting you mentioned that. Sort of 2 years ago, we were getting new build development proposals at 65 Rand net a square meter.
Correct.
We received proposals this morning on an RFP that we're working on that's at 95 Rand a square meter.
Correct.
Now, those are net rentals. You've then got 12 to 15 Rand a square meter of rates and ops over and above that. So you had gross rentals of well north of 100 Rand a square meter.
Absolutely.
Which 2 years ago would have seemed astronomical, but now the costs are what the costs are.
Yeah, it's also interesting. I think South Africa's taken a little while to adapt to the kind of global standard of warehousing. I think a lot of users in that space have almost identified the rental on their warehouse as an opportunity to cut costs. We've actually found the opposite. The more we focus on the distribution logistics business as a whole, we've found that kind of 10 to 15, maybe a little bit more than that, % of your overall OPEX is your warehouse rental. By occupying a modern facility that takes into consideration energy saving, usage of the cube, i.e. the height in the warehouse, the quality of the floor so you can rack to those heights, the size of the yards, the in and out of the trucks, racking systems, etc., you can actually bring down your OPEX substantially more, although you are paying a high rental on your warehouse.
In summary, I mean, we've got vacancy rates have plummeted. Building costs have skyrocketed. There's been an uptick in demand, so there's no buildings available, and that's led to this, between 30 and 40% increase in rental rates across the board.
Absolutely.
In the last 18 months, and I think that's been challenging with us dealing with our clients, both from an advisory and from a broking point of view, to kind of price counsel them and say, look, guys, rentals of 50 Rand, 60 Rand a square meter are a thing of the past. Generally in the past, you used to think about 65 to 70 Rand a square meter in your premium nodes, such as Limbro Longmeadow. Now we're doing rentals in Jet Park at 80, 85 Rand a square meter. So there's been that rapid increase, and I think it's been challenging for tenants to deal with that.
Yes, Kyle. It has been challenging. I think the real winners of this space are the guys that took cognizance of this 18 months ago. So if you got into your lease 18 months ago, even with your escalations, you'll be below what the market is today. So how do we advise our clients? We run quite extensive benchmarking exercises. I think with the new acquisitions, we run kind of formal RFPs to show our clients, look, this is what the market's paying. This is the best rates you're going to get. And it's unfortunately a landlord's market for our tenants. Another piece of the puzzle, which is quite new, is a lot more on our clients' radar than it ever has been in the past, is the ESG side of it. So what building techniques are being used? How are we looking to improve the communities around these facilities and warehouse developments? How are we incorporating water-saving techniques, solar, backup power, backup water, and all of these additional...
It's all about trying to bring down that operational cost, bring down that utility cost, etc.
Obviously, applying that to your ESG scores, and especially with the global, is a very important part of it. EDGE certification on your warehouse developments, which a couple of the landlords are looking at. I think to understand where you're going to be in 2 years' time from a pricing point of view helps you plan your business better. I think that's where we're here to help.
Exactly. That's exactly why we're here, and how we can help tenants across the board in all regions across South Africa. And we'll be giving insights like this as well as other insights in our new quarterly newsletter. So any logistics company or industrial companies, please sign up to that newsletter and you'll be first to get that information.